Hi, everybody. I'm so pleased to be joined by you and our fantastic panelists here today. I know over the past 2 days you've had a lot of opportunity to hear about emerging trends and venture capital perspectives and corporate initiatives. So very excited to dive into a topic that I think is the most exciting, and that's what comes next and what does the future of fintech look like. So pleased to be joined today by our panelists. We're going to do a quick round of introductions. So if you would, please say your name, your role at your company, and of course, to keep things interesting, a little icebreaker. I'd like to know what you wished to be when you were younger, when you grew up, and we'll see if any of that reigns true today. So I'll start us off. I'm Allie Felix. I do community at Workbench here in New York City. We are an enterprise technology focused venture fund, and when I grew up, I wanted to be a dolphin trainer. So Stephen.
Great. I don't know that I can top that. Stephen Hazelton, founder CEO of Street Diligence. We are a financial analytics platform for deal documents, fixed income primarily, but other areas as well. What did I want to do when I grew up? Oh, I grew up with a entrepreneurial father, so I always looked up to him and watched him go with his ups and downs, and ended up being an entrepreneur myself. So
Nailed it.
Thank you. I'm Tim Baker. I run innovation here at Thomson Reuters, and I'm responsible for incubating some of the new assets that we're developing, but I also work a lot with fintech, so I'm really pleased to be here. I wanted to be a vet when I was young because I used to watch James Herriot on English TV, and then I realized I didn't really like animals that much, so I changed my plan.
I'm Joe Zemer. I'm from Betterment. I am the Vice President of Communications and Government Policy. At the time, I'm also overseeing our RIA business platform as well. When I was younger, I was 100% certain that I'd be a professional basketball player.
Hey guys, my name's Azim Leela. I'm with CIBC, which is based, it's a Canadian bank, fifth largest bank in Canada. There's also presence here in New York. I've got two roles. One's within the bank, I lead the retail payment strategy for domestic payments and U.S. payments. And secondly, I am a director at the Digital Finance Institute, which is really focused on thought leadership and accelerating fintech startups in Ontario. And I wanted to also just give a shout out to my colleague in the back, Jans, who's invited me here today, and would like you to speak with him afterwards if you're looking at growing your business in Ontario. And just lastly, as a kid, I grew up in Tanzania, so I always saw the ocean, and my dream at that time was to be an oceanographer. So yeah.
We would have been friends. Dolphin trainer. So just so we have a better perspective on who's in the audience here, who's on the corporate side, and who's on the startup side, and who's just really enthusiastic about fintech. That should be all of you, right? Okay, cool. So for the sake of this panel, I know we have about 25 minutes here to dive into conversation, and we have 2 corporates on our panel and 2 startups, so I'm really interested to hear your perspectives. And what I'm going to kick off on is for the startup, or the corporates who are in the room, and that's on the future of automation in banks and what that looks like. So how are you thinking through that? How are you retraining your existing employees, and how are you easing concerns that machines will someday potentially take their jobs? Azim, do you want to start?
Yeah, corporate. I've been at 2 different banks, Royal Bank and CIBC, and really we think about it as intelligence augmentation. So we're thinking about, like, how do we give the frontline staff more tools, more power to augment what they already are doing. So they have more data insight, they can predict why that client might be coming before they even come there at that particular point in time, or make that phone call. I think it is an important debate because jobs do go away as you automate more. The part that I focus on is where do you just give more tools and more power to the people that are on the front lines doing what they already do. So we think about it as an augmentation play.
And do you have specific examples of what tools or what training you're doing for those people on the front lines?
Right. I can go really deep on one example very quickly.
Perfect.
At RBC, what was happening is when you call in to the contact center, we know your number already. We do a quick dip in our database based on your number to see if you've had any issues with your ATM, debit card, maybe you were trying to withdraw money, maybe your card didn't transact to the POS. So we already think we might know why you're calling before you even call, because we do a data dip. And so that's one of the tools we use to anticipate and predict your call purpose for two reasons. One is so we can route you to the right person very quickly versus going through like step 1, 2, transfer. And so that's like one really powerful example. And then we train them because we want them to be able to have first call resolution even faster, which is one of the metrics we look at. So that's just one solid example for you.
I think I'm a corporate, right, as well?
Whoever wants to
Okay.
jump in is
'Cause
more than welcome
we
to.
think of ourselves as not a startup, but certainly a fintech. So I guess if you're concerned about your staff adopting new technology, you've probably got a talent problem in the first place. What I hear a lot from our staff, from the folks in our content organization, and pretty much everyone, we're all information overloaded. And there's just a huge amount of data now in financial markets. And I think that the tools that we use today, I mean, I think everyone here probably uses, a browser and Outlook and all kinds of other things. They've not really changed in 15 years. And I think as far as augmentation, I think the tools that we're looking to get in front of our users and our customers are looking to overcome the deluge of data and information that's being thrown at them. I've got an example, actually. I mean, we work with a company called Ultrix, where we're a shareholder as well. And I was on a call last week with half a dozen folks working in our corporate center. And they manage a lot of data, combined data. They're pulling data from Sybase and Oracle and stitching it together and doing pivot tables, using all of that old technology. And they've been trialing Ultrix for the last 4 or 5 weeks. And one of the people on the call said, this product has fundamentally changed how we work, to the extent that we now go home and work at normal hours. I mean, rarely do you hear about that, but that's the promise of some of the technologies that are emerging. Now, Ultrix is actually a 19 or 20-year-old startup. They just IPO'd. But I think a lot of the technology that we're experimenting with has that kind of promise.
Fantastic. And one thing that I'm curious about too is new models of banking that are emerging and what that packaging looks like. Are we repackaging models of banking that already exist, or are we really changing the distribution model of how it's coming into everyday use?
I tend to think that it is fundamentally changing the way that banks operate. Right now, it feels like for a lot of people, especially if we want to look at anyone basically, I think, under the age of 40, we're starting to see an unbundling of core services that a bank does. I think I'm a good example. I obviously work at Betterment, so I would go to them to manage my assets. But if I'm going to get a mortgage, the last place I'm probably going to check is Chase, where I do my primary checking. I'd look at a SoFi, I'd look at a Better, maybe a Morty. Eventually, I think what will happen is that we'll see a rebundling of these types of services. Services maybe like Betterment will get to a point where we will be able to service more of your needs to try to rebundle that relationship if we can establish ourselves as the primary trust relationship in the customers' lives. I think if you look at existing financial services, it's the lowest trusted industry in the entire country. By Edelman's annual trust survey, it basically gets that every single year. People trust Comcast and Time Warner more than they trust their financial services organization, which is pretty shocking. But the most trusted industry is technology, which I think creates a really unique opportunity for new companies bringing products that offer a better experience to capture market share and client trust.
I would just add to that on financial services by definition is services, not product. I mean, obviously there are products, but a large portion of the volumes and revenue that come through financial services is a form of middleman, a form of repackaging a service or making a service more efficient. And so to me, a new distribution model, a new way to deliver a better service is excellent innovation in this industry. So, and that's, for the most part, it all boils down to some sort of innovation around a service, not so much product.
And I'd love to know, for those of you who are partnering with banks and selling into big banks, if you are, how has that come to be? What has been your process with that? How have you built relationships? And how can startups in the room moving forward really strengthen those ties to facilitate that process? And on the reverse of that too, on the banking side, how can banks better look at startups and interact with them and partner with them?
I'll start with that. So we sell into large investment banks as well as boutique investment banks. It took a long time to get into the bigger banks. A long time. The sales cycle was 2-3 times what it is for a hedge fund or a direct lender, which is our other client base. Extremely challenging, opaque. The salesperson really has to be on the side of the business person that wants the product or the service and has to help push that internally. A lot of signatures and a lot of patience is required. But the benefits are great. It's sticky revenue. It's credibility. It's a client base or a user base that's expansive and it turns. So those clients will leave. They'll go to the buy side. They'll go to another sell side bank, and you've got a organic client lead there. So they're extremely valuable. I would not put all your eggs in one basket and go after investment banks or commercial banks as a client base. I would diversify across other easier, lower hanging fruit, but I would mix in the big ones because they're very attractive.
So I think this is probably one of the hardest things fintechs have to do, which is to get on that vendor list. And I think, to echo your points, you've got to be targeting the right person. You've got to have the right product. You've got to have a value proposition that resonates with that person. And very often the banks, are more than one entity. So you've got to make sure if you've got a wealth product, you're pitching the wealth team, you're not talking to the CTO of investment banking. You're just wasting their time. I think the sales cycle can be not months but years. You've got to sync up to the buying cycle. You've got to find the right people and talk to them and warm them up. And you'll probably have to go back 2 or 3 times. And my advice is every time you go back, demonstrate that you've taken on board what they said last time. The product has evolved and it's evolved in the direction that they expect to see. I think as far as the banks are concerned, and when I was at UBS, I think I made the mistake of just taking every single meeting. So you end up with a lot of startups and great, interesting ideas walking through the door. But if you then have to go and find a business sponsor, there's a lot of legwork involved. So you're actually better off figuring out where the demand is, where the issue is that the bank needs help with, or where you need some new thinking. Look at the landscape in that area. You can go online now, and Matt Turk and other people are great at doing these landscapes. You can figure out who the startups are and then proactively engage around one of those areas, or else you'll just be spreading yourself too thinly. And you'll probably also kind of anger the fintechs because you'll be taking those meetings and stringing them along, and no one really wants that.
We have not opted to partner with any banks, but I think my key feedback would be find the clear owner internally who's going to own whatever you're trying to do. I think we went into a lot of conversations where perhaps the CTO, a head of retail banking, a head of digital banking, and a head of wealth management all thought that they should own that type of opportunity, and it often created somewhat of a mess in the communication process. I think if you are earlier stage on the fintech side, I think the decision should be made pretty early to either go retail or sell to banks. Until you reach a certain scale, it is very hard to straddle both. I think working with any bank is going to require a lot of resources internally, a lot of bespoke engineering work that is not totally easy to replicate for another bank. So I think it's much more ideal to pick a clean route at the beginning. And if you choose retail, you'll reach a scale where it's probably easier to then work with the banks at a later stage.
And Joe, right there, will you just double click? I'd love to know, what do you think the biggest benefit to Betterment has been to not partner with banks and go this route?
I think 2 things. A, it gave us a clear focus at the onset to really build at the onset for the end consumer. And 2, I also think that we probably got a brand and reputational lift by not being associated with anyone else early on, that we were truly independent, which I think we certainly value and a lot of our customers do.
Azim.
Yeah, so you heard Dennis from DPixel speak earlier on. In my previous role, I actually helped bring and sell DPixel internally within the bank, and we ended up doing an 8-week POC. And just to draw on that experience, there were 3 key drivers. Number one was we had a gap in terms of our service offering on a digital perspective. So we use AI chatbots. So we clearly didn't have expertise. It was a gap. So we identified vendors around the world, and we decided to work with DPixel for a couple of reasons. One is that they had very deep technical experience, but also very strong entrepreneurial experience. The team had spent some time out in the valley. Very strong technology stack differentiator in terms of NLP processing, and number 3, they were local for us. So anytime we wanted to meet with them, on short notice, we had that opportunity. And so I think looking back, I agree with the team here in terms of looking at business cycles and identifying the key stakeholder. I totally agree. That's all given. But on top of that, what I think is really important is there was a technology differentiator that we couldn't find somewhere else, and the fact that they were local didn't hurt at all.
And was that relationship spurred by your interest to find a vendor that was suiting your needs, or how did that come to be? Who pursued that?
Yeah. So the story is I got an introduction from one of the university professors who works with the founders. So we had an introduction from a very reputable professor at a university. Number one, and number two, the technology expertise. Dennis met with our our VP for technology, and because they had a strong technology stack, we as a bank could say, yes, we can test internally very quickly, number one, but we can also bring the solution to market. We can just turn on the switch and it can be live in market. So that really helped facilitate the ease of the conversation. And then we also had a pool of money, innovation money, which was unallocated in terms of where we could spend. We just had a pot of money we could use, and so having access to that unrestricted basis helped accelerate and fuel the pilot.
So all of us here today are obviously here to learn about the future of fintech and what's emerging and what's to hold. So what I want to know is what you think the future of fintech and the future of banks looks like. The bank of 2020, the bank of 2050, like blue sky, clear opportunity. What do you think happens? What crazy ideas emerge?
I'll take a stab at this. I really like Elon Musk's idea of, he's looking at implanting a piece of gel technology in your brain.
Do you think this
right?
will happen?
I
yes
think
or
so.
No?
This whole idea of singularity, even Ray Kurzweil talks about this, right? So I believe that, yes, there will be a time where our brains are connected to the web, right? Our thoughts will be able to be typed out on a screen, so we're not typing it out. And I know that there's some big thinkers that are trying to reimagine not just banking, but the whole something larger, the whole idea of human existence, and how our thoughts can easily be communicated in a much faster way. And I think banking will be like this as well down in the future. I can't say when, but I think this is a point. If I were to think blue sky, this is where I think it's going.
I'll go a little shorter term. I think a lot of the decision-making process is just going to be wiped out, not necessary for the consumer. I think where we would directionally like to take Betterment is to a place where ultimately we would just get your paycheck and we would chop it up for you, tell you exactly what you should do with it and do it for you. That would mean we're going to go ahead and put this in a taxable account. We're going to put this in an IRA, and we know what type of IRA. You shouldn't have to figure that out. That makes no sense that it takes so long for the average person to figure out what type of IRA to use. We get bills. We should know which account to pay those out of. What's the optimal route? If it's a checking account, we will know like the minimum, and you'll never have an overdraft balance. That really the decision-making process and the maintenance should just completely go away.
And is that something you're working on now at Betterment? Or when do you see that
yes.
coming to
I think
to be?
That type of vision is something that we're continually working forward and doing incremental work to eventually get there.
Yeah.
I would definitely buy that.
Me too.
So look, I think nearer term, I think you said 2020. I think we're going to be looking at, maybe a new paint job, a spoiler, a turbocharger, but pretty much the same product. I think 2050, I think we're looking at a radically different world, all electric, a platform, or maybe multiple platforms. I think the banks are really going to either not exist or look quite different. I think a lot of the firms that are who are running great platforms like Amazon are probably going to be even more into banking. I mean, you're looking at already Apple have got Apple Pay. They're probably going to be the first firm to issue a crypto version of their security. You heard it here first. I think you're going to. I think the whole experience. I like your vision. Will be fundamentally different. I mean, we all forget to do certain things. The worst thing you can do as an investor is to forget to invest and leave it all in cash. So that's why I like that vision as well. And I think bots and AI and machine learning will be working in the background, maybe blockchain, to make these platforms super efficient and really free of human contact.
Yeah, just to add to that, I think, and looking 5-10 years out, these are slow trends. The industry today is huge. I think there's a lot of inefficiency. There are a lot of jobs that will be eliminated because of technology. It will not be it hasn't been a fast trend. We've seen it in our space. It's we deal with B2B, really institutional investors and institutional bankers, and it used to be when I first started in the industry, maybe a much bigger analyst pool and a lot of time spent gathering data, gathering documents, gathering information, putting it in Excel. Now it's a much smaller pyramid at the bottom, and those analysts are spending less of their time gathering data, more of their time thinking, and there are less of them. So that's just going to continue, and I think it's a trend that is only a good thing for the industry. It makes it more efficient, and we'll see that on the front end in terms of products and services that are probably more effective and lower margin. So long-term trend, I just see the industry just continuing to shrink. With the financial services, the financial crisis or pre-financial crisis blip being sort of an exception and a little bit of a choppy road, but a general trend down.
All right, so takeaways we've heard is that intelligence augmentation is coming to the future of banks. You must demonstrate that your product has evolved when you're working with banks as partners, and that Amazon may be holding our future bank money. So I'd love to hear from the panel here. What are key takeaways for the audience, whether on the startup or corporate side? What does the future of fintech hold? How can they be ready for it? And what should we be thinking towards? Any best practices?
I think if you're building a company, I think just be patient. It's always, in this industry, it's going to take longer than I think you certainly envision. We started working on the company in 2008. It was a 6-month timeline to launch. We launched in mid-2010. That was due to regulatory approvals, building the broker-dealer. Everything just seems to take longer, and that's maintaining and building relationships, getting deals done, acquiring customers in the retail side. It's certainly just it's a war on patience.
I just to kind of be a bit more pragmatic, there are two kind of things I think are important to watch. So there's a bank in Munich called Fidor Bank. They've just partnered with the Singapore Monetary Authority, where Fidor, it's an open banking platform. They're training 12 polytechnic universities in Singapore on upskilling the university students on how you do open banking and how you can innovate on a platform. And I think, I think for the fintechs and for the future leaders of this industry, they have to technically understand and be upskilled. And I think this is a gap we have here in North America. So I think the Singapore Fidor model is an excellent model to look after in terms of upskilling. What I'd also say is, patience is important, but really focus on the problem you want to solve and validate that really, really well. And that's why Apple and Google can do that, provide such a great service for and take so much friction out of the process. And so I think the future of banking is really frictionless banking. It's products and services that have been unbundled and rebundled to your personal needs, right? And finally, I think another big trend is family banking. So, we at CIBC and other banks are looking at this concept of, let's go beyond banking for the individual. Let's start thinking about banking within a family unit. And I think this is another important trend or takeaway for you to think about.
Tim, Stephen, anything to add?
No, I'll just say try to go after the markets that are growing. Look at communities that have particular pain points that are growing. Don't try and fight against firms that have got much deeper pockets. Don't take on Microsoft or Apple. I think Microsoft generates $23 billion of free cash flow a year. So I think you've got to be very, very focused and pick your battles, and really try, as you said, find that idea and then be prepared to really double down on it and build your expertise in that space.
So Tim and I were sort of joking before the panel that the word fintech didn't exist 5-10 years ago, and that's a good thing because it means that there's a tailwind in this industry, and a tailwind never hurts. And so I think it's a wonderful time. I think it's a great time for change in this industry. It's a great time for disruption, which means entrepreneurial opportunity. And I agree with Joe. If you're not persistent and you don't grind it out for 2-3 times more than you thought it would take in terms of runway, you're not going to make it. And I think if you can do that, it's the payoffs are great. It's a really, really wonderful time in this industry.
Thank you for the conversation. Please join me in a round of a hand for our panelists.